Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And before we get into our intriguing content today, please join me in welcoming our featured guest. First timer on Ron Siegel Radio, Doug Waldman is with us, Geneva Financial. Welcome, Doug.
Thank you. Welcome. Happy to be here.
Glad to have you with us. And let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Hey, thank you to all of our teachers. Today's National Teacher Appreciation Day. Thanks to the teachers. They're out there. They're putting up with the little rascals all day long. I know I've got a daughter-in-law who is a teacher, so I get it, what you're going through. And having beaten anorexia, although this one's a little bit healthier than some of the others that we do, today's National Roast Leg of Lamb Day. Are you a fan of leg of lamb? I'm more a fan of the mint jelly, but that's just me. I guess that's a whole different story. And we've got a question of the day. What's our question of the day? Would you rather be a hero or a villain in a movie? Put it in the chat. Put it in the chat for us. If you're watching us live or if you're watching a replay, either way, put it in the chat. Would you rather be a hero or a villain in a movie? That is our question of the day. Let's take a look and see what the markets are doing today. Do we want to see what the markets are doing today? Okay, we're looking at it. It's not too bad with the markets. They're always, in a week like this, we had lots of news last week. This week, we've got very, very minimal amount of news. So let's take a look. The Dow Jones Industrial Average up 63 points. The S&P 500 is up 16. NASDAQ up 44. Oil down 8 cents a barrel, 9 cents a barrel. Okay, so we're watching all of these things for you. Let's see what the 10-year Treasury is doing. That's down another 5 basis points on the yield or interest rate, 4.436. Gas prices, I don't know if we want to know about gas prices. $5.35 a gallon here in California, $5.35. Yes, we liked high taxes, but there is a new report out. I don't know if you've heard this one yet. I can't make this stuff up. There is no possible way anybody with a sane mind, and I do not have a sane mind, could make this up. But I'm going to report it anyway. It's a government study, so you know that when you've got $37 trillion in debt, you have to try and find ways to waste money, and our government does an excellent job of finding ways. It's one of the few things that they really, really are efficient at. They can waste money with the best of them. So our latest study that we've got out, again, I can't make this up, is that cooking food is actually air pollution. That's the study. It's a government study. Cooking
is what it is.
Hard to resist, delicious smell of food, cooking at restaurants, food trucks, street vendors across Los Angeles. New government studies suggest that those aromas may be negatively impacting air quality. I just don't get it. I mean, and we had to do I wonder how much this study cost us. I wonder if they did the study with the University of Columbia, because we know about their students there, and not quite the brightest cups on the people on the earth. So maybe that's where the issue is, but we're watching all of it. So that's part of the issues going on. I don't understand this one. I have shared with you many, many times, proud Jewish person that I am. Now we've got the President of the United States going and making a speech at the Holocaust Museum today. Somebody that hates Israel and hates Jewish people, he's going to the Holocaust Museum. There can only be one reason he's going there. It's got to be just a pander. Well, there's only two reasons. Number one, he's probably looking for votes, or he's looking for money. Other than that, what else does he do? I mean, think about all these things that he's done. Certainly not a friend to Israel, never has been in any of the history things that I've looked at. And now he's over at the Holocaust Museum making comments. Anything I say can and will be used against me for the rest of my life, so I won't say anything more about that. But let's just take a look. There's an article I saw earlier also as well. 21 dumbest things we spend too much money on. Okay. I want to see how many of these I fit into. Okay, let's keep track. Keep track of how many of these things you fit into. Number one is Amazon. Although I did share this morning on our social channels, I just happened to come across this, a 47% discount on Beats earbuds. 47% discount on Beats earbuds. So, the little things like the AirPods, whatever. Auto insurance. Okay, that's another one we waste money on. I guess we have to have it. Lottery. Okay. It's almost like going to see you in Vegas, Josh. I mean, either way, it's just a matter of how much do you want to lose. It was a great, I don't know if you ever saw this. I was a fan of Bill Cosby in the day, and I used to see him in Vegas quite a bit. And one of his great lines was about how foolish his audience was. And we all laughed at that when he told us how foolish we were, because think about this. How many times have you gone to Vegas and made the comment, I'm going to Vegas, I plan on only losing $500 or $300 or $1,000, whatever your budget is, it doesn't matter. Cosby's line was, why don't you just mail the check and save the cost of travel? If you're planning on losing, what the heck? Same idea with the lottery. Okay, how much are you planning on losing? Now, I look at the lottery as not the idea of winning the lottery, because the odds of winning the lottery are so slim. But it's entertainment. What would you do if you won the lottery? I know that what's one of them, I think I saw a sign that it's over $300 million right now. Okay, I'm going to move on. Prescriptions, use these adjustable glasses. Okay. Car repairs. Okay, there's a cloth that removes scratches from your auto. Okay, I've tried that. Didn't work so well. Cancel your doorbell subscription. Use a mini Wi-Fi camera instead. Energy bills. Cut your electricity costs in half. I put in one of those sensor things that kind of monitors our activities and turns the air conditioner off, turns the heater off, all that kind of good stuff. If you have over $20,000 in credit card debt, you could be eligible for a debt relief program. Our friend Chris Corrales helps with that one a lot. We did just get a tens machine over the there's a problem here, because I'm going through these things, the 21 dumbest things we spend money on, and there's a lot of them that I'm in this in the boat here. So there's a problem here. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to talk to a disruptor. Yes, I'm gonna call him Doug Disruptor Waldman. He's going to be on the broadcast with us, talking about one of the biggest disruptors in the mortgage world. We're going to talk about tips for younger home buyers, how to make your dream a reality. And if we get to it, what happens if you don't use your credit card, all that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, and every day at this time. I'm sorry, the Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, APR. They tell us the number to put in your calculator if you want to find out what your mortgage payment's going to be. 30-year conforming loans yesterday down. They're at 7.052. 30-year jumbo loans down 7.184. 30-year FHA loans down 6.748. 30-year USDA loans down. That's the rural areas. Generally no down payment. 6.757 in the best loan on the market. You have to earn this one. It's for the veterans. 6.59. That was up a little bit yesterday. If you want our market thoughts every morning as early as the data allows, and yes, it's already out, go to rsrmarketminute.com, rsrmarketminute.com. You get a free email just once a day from us, as early as the data allows. We send that out, giving you our thoughts on the market. If you want it, again, free to you, rsrmarketminute.com. Let's see what the markets are doing today as we're sitting here chatting with you. The S&P 500 is now up 15.66. 10-year treasuries down 5 basis points. That's on the interest rate or the yield, 4.44. Mortgage-backed securities, that's nice. We like it. The bond itself is up 27 basis points. That tells us that interest rates are down a little bit today. That's the 30-year mortgage-backed security, the bond itself. Now, you can get all that information on that super secret website, google.com. What you come here for is to find out why these things are happening. Well, there's not a whole lot of news right now, although we are going to hear from Neil Kashkari. Thankfully, after we've seen what he's done as a Federal Reserve president, thankfully he didn't become governor of the state of California, although maybe he couldn't have done worse than we have. CoreLogic Home Price Insights from Black Knight HPI. CoreLogic reported the prices rose a very strong 1.2% in March after rising 0.7% in February, showing that home price appreciation not only continues but is accelerating. Remember, CoreLogic only forecasted that it would rise by 0.4%. So they've been very conservative. Year-over-year home prices are now up 5.3%, which is a slight decrease from 5.5% in the previous report, but is due to a very tough comparison from last year, meaning it went up 1.4% during the same month last year. After the last two reports, CoreLogic has bumped up their forecast for the next month to 0.8%. They anticipate home prices to rise 3.7% over the next 12 months, up from 3.1%. Again, they are always conservative and will likely see greater levels of appreciation. Black Knight also reported that home prices rose 1.2% in March and rose 5.6% year over year, down from 6%. Again, remember that the year-over-year number declined because of a very high comp from last year. Bottom line, it's important to educate yourself, your friends, your family on the financial opportunity that still exists in home ownership. This report was from March. At the very beginning of the spring home buying season, will likely continue to see strong appreciation in the coming months. It's not your job to get the best rate possible. It's your job to get in the market, get in the game. We'll take care of the rate when we talk to Doug Waldman in just a minute. Inflation components. Inflation progress has stalled in the last few months, but remains one of the most important economic indicators. Next week, we'll get the CPI inflation report for April, which can have a big impact on the markets. While there are a lot of factors, the New York Fed Supply Chain Pressure Index, which can influence inflation, fell from negative 0.3% to negative 0.85% in February and April, which is the lowest figure we've seen since August of this last year, when we're seeing really good progress on inflation. This is just one aspect of inflation, but a good sign. Oil prices have a big influence on headline inflation and some influence on the core readings as well over the last few weeks. We've seen oil prices decline roughly 11%, which is a good sign. Part of the reason for this is an increase in production. We haven't seen that in California. So unfortunately, we continue to get higher and higher prices. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make a call. 800-306-1990, 800-306-1990. Joining us on this enlightening episode of Ron Siegel Radio as we welcome Doug Waldman, an expert in real estate and a specialized loan officer at Geneva Financial. Doug brings a wealth of experience from his time as a realtor, appraiser, property manager, investor, builder, developer, and mortgage loan originator. I'm getting tired just reading all this. On this episode, Doug's going to dive deep into the HomeSelect loan product, discussing why it might be the most disruptive financial tool in the real estate market in the last 90 years. Welcome, Doug. Glad to have you with us.
Thank you, sir. Appreciate it. Glad to be
You've
here.
got all those things that you've done, and I get tired just reading it, no less you doing it. Pretty amazing resume there, my friend.
Got a little bit of experience. Been a little bit of everything.
So give me an idea. What is this? We had I've been talking about this HomeSelect product, and we talked last week. If you missed the episode, shame on you. But Todd Ballinger was on talking about this product. You've addressed it in a little different way than most. You've been branding it as being disruptive. Why is it so disruptive?
It utilizes some technologies that are pretty cutting edge, and it's really the only mortgage that's been introduced in the last 20 years. The 30-year amortizing loan came out in the 1930s to help people buy homes after the Great Depression, and it's all front-loaded with profit. It's all slanted towards the bank. This gives the borrower complete autonomy to handle their finances, and they actually stop living for their house. They now are able to utilize our house and the financing of the home as a tool, and so it's pretty disruptive. It's going to do. I think it's going to do to mortgages what Uber and Lyft have done to taxi industries and all this other new cutting edge technology.
Wow, that's a pretty bold statement. I looked at one of the products. In fact, I've got one in front of me, and I think when we talked to Todd last week. I think the number that we came up with is it took about 22 to 23 years to pay off half of a mortgage, half of the principal of a mortgage with a traditional 30-year mortgage. 22 or 23 years. Now, on the HomeSelect, how long is it going to take to pay off almost the whole thing?
The average client pays off in 7 to 12 years. I just completed a loan for a gentleman in California. We estimate that he's going to pay off in 4.5 years. His effective APR was somewhere in the ones. At the end of that time, he'll have a $900,000 line of credit, free and clear. He'll own a home that just recently was worth 1.15, so probably 1.5 in 5 years. And we estimate we're going to save him $1.2 million in interest expense.
Wait. $1.2 million saved in interest expense?
In interest expense.
That's massive.
Huge. Disruptive.
There you go. Disruptive. So think about that concept. Now, just, I don't know if you remember this. I'm going to throw this at you anyway, and if you don't know, it's not a big deal. Do you remember how old the person was? Roughly?
Young 40s.
Young 40s. So can you imagine? So by the time he's, 45 years old, 50 years old, he's got no mortgage payment, yet he's got all the liquidity of that. My guess is probably his biggest asset.
And it goes even beyond that. Because if you think how we've been hammered to only utilize 30-year amortizing loans, so now he frees up, let's say, $6,000 a month in 4.5 years. that was earmarked to keep going to his mortgage year after year for the next 30 years. So not only do we save him 1.2 million, not only do we get rid of the biggest debt he's ever going to own, but we free up $6,000 a month to start putting in income producing vehicles. So we estimated, I think, at 7% growth on his investments, he makes another $1 million by the time he would have been still paying for his mortgage. So
By the time he would still have been
swing.
Wow. So by the time he would have still been paying for the mortgage, he gets another $1 million.
Yep, cash.
Those are some life-changing numbers. Now, one of the things that I'm looking at in this product, Doug, and I don't know if it's something that you talk about much, but we're looking right now, and I know that I'm an outlier, but I look down at deep into the background of the economy and what's happening in manufacturing and what's happening in auto sales and what's happening in in services. And the numbers that are not being reported in the marketplace are showing that our economy is slowing down dramatically. People are losing their jobs. If you don't have a job and you have to make that $6,000 a month payment, that could cause a lot of family stress.
And it has for generations, right? We don't
Right.
care. Ron, you're sick. That's unfortunate. Make your payment. You lost your job. Unfortunate. Make your payment.
No one. The banks don't care.
With this loan, as long as you've got equity or a balance, available credit above your loan balance, if you don't make a payment for the month, nothing happens. Zero. It reports as paid as agreed. The interest just gets moved to the top of the loan. So if you owed $100,000, you had a $200,000 line, so you have $100,000 available credit, and let's say you had $3,000 worth of interest expense. You just owe 103. Paid as agreed, still reported, because there's nothing derogatory happened. You're just eating up a little bit of your line.
And if I need to pulse a little bit of money out of my line to go and buy some groceries, maybe.
Write a check. This is the Swiss Army knife of loans. This thing does everything.
Wow. We're going to continue our conversation with Doug Waldman when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Tips for younger home buyers, how to make your dream a reality. Maybe this loan is for the younger buyers too. We're going to chat with Doug Waldman about that when we come back also. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Hey there, friends. Wondering if now is the right time to buy a home? Or are you waiting for a bunch of foreclosures? The facts speak loud and clear. Defaults and foreclosures are down, sure. We might be headed towards a recession. But did you know interest rates typically drop and real estate values often go up during a recession? So what are you waiting for? Higher prices or higher payments? Don't navigate these waters alone. Connect with RonSiegelRadio.com today. That's RonSiegelRadio.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Tips for younger home buyers, how to make your dream a reality. If you're a member of the younger generation like Gen Z, you may be asking the question, will I ever be able to buy a home? And chances are you're worried that's not going to be in the cards with inflation, rising home prices, mortgage rates, and more seemingly stacked against you. While there's no arguing this housing market is challenging for first-time home buyers, it is still achievable, especially if you have professionals on your side. Here are some helpful tips you may get from a pro. Number one, explore your options for a down payment. If a down payment is your number one hurdle, you may have options to give your savings a boost. There are over 2,000 down payment assistance programs designed to make home ownership more achievable. And that's not only the place where, and that's not the only place. you may be able to get a helping hand. While it may be an option for everyone, 49% of Gen Z homebuyers get money from loved ones that they use toward a down payment, according to Lending Tree. And chances are you won't need to put 20% down unless specified by your loan type or lender. So be sure to work with a trusted mortgage professional to explore your options, find out how much you'll really need, and learn about guidelines on getting a gift from loved ones. Number 2, live with loved ones to boost your savings. Another thing a number of Gen Z buyers are doing is ditching their rental and moving back in with friends or family. This can help cut down your housing costs so you can build your savings a whole lot faster. Bankrate explains, quote, many have opted to stop renting and live with family in order to boost their savings. 30% of Gen Z homebuyers move directly from their family member's home to a home of their own, according to the National Association of Realtors, unquote. Number 3, cast a broad net for your search. When you've saved up enough, here's how a pro will help you approach your search. Since the supply of homes for sale is still low and affordability is tight, they'll give you strategies and avenues you may not have considered to open up your pool of options. For example, it's usually more affordable if you consider a rural or suburban area versus an urban one. So while the city may be livelier and more energetic, the cost of living may be reason enough to look at something further out. And if you consider smaller homes and condos or townhouses, you'll give yourself even more ways to break into the market. Colby Stout, research analyst at Bright MLS, explains, quote, being flexible on the types of home and exploring more affordable neighborhoods is important for first-time buyers, unquote. Number 4, take a closer look at your wants and needs. And lastly, an agent can help you really think about your must-haves and nice-to-haves. Remember, your first home doesn't have to be your forever home. You just need to get your foot in the door and start building equity. If you want to buy, you may find some compromises is worth it. Chase says, quote, an open-minded approach to house hunting may be one way for Gen Z homebuyers to maintain some edge. This could mean buying in areas that are less expensive. Differentiating needs versus wants may help in this area as well. An agent will help you prioritize your list of home features and find houses that can deliver on the top ones. And they'll be able to explain how equity can benefit you in the long run and make it possible to move into that dream home. Don't forget our giveaway right now. rsrlinks.com/FHIQ. rsrlinks.com/FHIQ. Go there and fill out the quiz. Don't worry, we don't care about the score. Just fill it out so we know where you stand and we can put together a game plan for you. And oh, by the way, you'll get in that raffle for a trip to Nashville. rsrlinks.com/FHIQ is the link. Bottom line, real estate professionals have expertise on what's working for other buyers like you. Lean on them for tips and advice along the way. As Directors Mortgage says, with that support, you can make it happen. The quote, the path to home ownership may not be straightforward one for Gen Z, but it's undoubtedly within reach. By adopting the right strategies like exploring down payment assistance programs, sharing living costs with relatives, you can bring your dream of owning a home closer to reality, unquote. Give me a call, 800-306-1990, 800-306-1990. We are joined this morning. Doug Waldman with Geneva Financial is with us talking about the HomeSelect product. Hey, Doug, can a millennial or a Gen Z use this product to buy their first home?
Absolutely. And they should be investigating it if they qualify. This is by far most likely for qualified borrowers. This is for people that have more money than month. If they're living hand to mouth, then, there's other options that are a little bit more price suitable for them. But if they're like a lot of my nieces and nephews and kids that are millennials making real money, Gen Z making real money, absolutely. My son is getting ready to come into this product. He's a 30-something-year-old young man that owns a house in Southern California. We've estimated he'll pay off his house in just shy of 4 years. I think it was 3.8 or maybe 4.2. Have a $500,000 line of credit when he's done.
Is there any limitations on what he can do with that $500,000 line of credit?
No, it's attached to an FDIC insured checking account. You can write a check. You can buy cars with it and then just pay it back down again. It is just like a line of credit that you'd have at the bank. It's attached to your house. You have $500,000 to do with as you see fit. And that's what most people do. They become their own banker.
Can we use your son for a second as an example here?
Sure.
So your son goes out and puts this on his property, and he's got his property now paid off, and let's just call it around 5 years.
Okay.
And you said he's 30 something, so I'm just going to say 30 for whatever. It doesn't matter what the number is.
Okay.
So he has his house paid off at age 35, and he takes $500,000 and goes, and I'm assuming, and we're just going to make these assumptions as we go, that the house that he's looking at right now is not his forever home. He's getting into something to get into the game. It's not the 4-bedroom home with the white picket fence and the pool in the backyard and a 10,000-foot lot or whatever.
Right.
So now now we're going to advance the clock. He's 35. He's got $500,000 in equity there. Can he take that and go buy, say a $1 million house, assuming he qualifies again, buy $1 million house that he can move into and keep this loan on the departing property?
Absolutely. He could write a check from the equity, which means he doesn't have to do any heroics. His realtor doesn't have to do any heroics. They can write an offer on the new house without a contingency because he doesn't need to sell house A to get into house B. He simply just writes a check for the deposit. We get him requalified for the new loan, which would also probably be another HomeSelect. He put a tenant in the old property and do it again.
So now let's just say hypothetically, he's age 35 now. He's got a $1 million home with $500,000 in equity in that because he just made a down payment. Right. So obviously he's got a loan for $500 in his HomeSelect, and now he's looking at say 7 years to pay that one off. So now he's age 42, and now he's got both. Hypothetically, he's got both houses paid off now, right?
Right. He could have a tenant pay off the down payment for the new house, and he only owes half or 50% on the new house, and the tenant pays off the down payment on the departing property. It's a no duh.
Yeah. So he's developing. We're at 42 right now. The tenant basically paid off the departing property, his original.
Right.
He's been putting his money into the new one. So that's pretty close to being paid off. So now you've got both properties appreciating, and I didn't even talk about the appreciation on the last one, but if he's in Southern California, he's probably appreciating it somewhere around 5.25%. So he's got a property that's worth $1 million, a property that's worth a $500,000 and a half. So now he's got 5% of that. So it's another, is my math right? $75,000 a year in appreciation coming in,
or more.
Or
where
more?
Where he lives is a very, very hot market.
Okay. So now he could hypothetically decide at 42, I've got these two properties. I can write checks out of those and go buy a third property.
Yes, sir.
So
we even have techniques where we find that people build equity so quickly in their properties because of this that they go back to their realtors and within several years start buying investment properties because they can write a check. And so even if they're in their forever home, you reverse what you just said, and they can buy an investment property without displacing themselves from the first house. And we have techniques to even get them into that house with no further income qualification, like a DSCR loan.
Wow. So again, I talk my tagline, Doug. I've changed my tagline. It used to be is that I used to say that we make dreams come true, or we finance your dream. And now I've started with this tagline that we're basically saying strategy beats rate always. Now, when I talked about this last week, we talked about the fact that this loan is probably a higher face interest rate than where fixed rate loans are right now. Is that still true?
Absolutely.
But the effective rate, because of the way the strategy, the numbers are way below what we even saw 4 or 5 years ago.
Yeah. Absolutely.
So what was the number you said on the one, the person you just qualified? It was in the ones, I think you said, wasn't it?
Ones are very low twos.
1% effective interest rate, and the ones or twos. Is it a short-term loan or a 30-year loan?
It's a 30-year loan. You have 10 years at full line of credit, and then after that, it starts reducing at 1/240th a month. There's only 3 reasons people even refinance this loan to begin with. They pay off so quickly. They either refinance to drag out or to restart the clock on the full 10-year line of credit. Many people will refinance it just because their house has been appreciating and they want to go to 80 or 90% on the new value and increase their line, giving themselves even more purchasing power. So, for example, this gentleman, let's say for round numbers, he had $1 million home. We get him an $800,000 line. In 5 years, that house in Southern California could very easily be 1.5. Now he's up to a $1.2 million line. So he could refinance just to expand that. And then the third reason is because once we get, we were expecting rates to drop. We don't have a crystal ball when this might happen, when the Fed might get their finger off the scale. But eventually, intellectually, we're assuming that sooner or later rates will go down. And when they do, people can then lock in at the bottom of the market for 5 years and get even more savings.
Okay, when we come back, I want to talk to you about the next step of this. But is this a loan for old people like you and me, Doug? We're going to talk about that when we come back. You can reach me anytime off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by rsrdebtfree.com, rsrdebtfree.com. Not going to give you a full report today. I am going to share with you, if you have bills that cannot be paid off, you can't pay them off within the next 60 to 90 days, you need to go to rsrdebtfree.com right now. Don't wait unless you're driving. But the idea here is you can either do a debt consolidation loan if you've got equity in your property. We don't care about your interest rate. What we care about is your blended household interest rate. Yes, we want to take your 4% mortgage and blend that in with your 22, 23, 29% credit card debt and all of your other unsecured debt. We're going to look at all of it. If you don't have equity in your home, well, we've got a solution for that also. Talk to our friend Chris Corrales. He's got a program that'll help get rid of all of your unsecured debt, generally in 5 years. Generally, they're negotiating interest, everything else. We want to take a look at that for you. We want to get you out of debt so you can enjoy your life. rsrdebtfree.com. That's the Borrow Smart segment brought to you by rsrdebtfree.com. Continue our conversation. We are chatting with Doug Waldman this morning. Or this afternoon, depending upon when you're listening to us. So being that I can only say this because I am old, I admit to it firsthand. No hair. Doug and I go to the same barber, if you're watching us on RonSiegelRadio.tv. And and Doug's told us he's got a 30-something son, so I know he's about as old as I am. Doug, in our age, we're starting to come up with some of our peers are thinking about they should be thinking about a reverse mortgage. But here the question becomes, okay, is it possible to use this HomeSelect product in lieu of a reverse mortgage?
Absolutely. And it's more flexible by far.
A lot more. Well, something, one of the things, and I will admit that I've gotten a lot of educational materials from Doug. We borrow materials back and forth. But if you have a income and you've got a $1.5 million property with a $700,000 loan, there's not a lot of options in the reverse mortgage world for you. Can you do this on $1 million property, a $2 million property?
We can go up to $3 million in loan amount. So this could be a $5 million property. If they're at 60%, we could be at $3 million, provided they have income to qualify, because unlike a reverse mortgage, this is an income qualification loan. But as long as they qualify when they get the loan, they could go up to 80% without mortgage insurance. So if somebody has a 50% loan to value on, let's say, a $3 million property, they can go to $1.5 million of balance, but they can go to 80% of $3 million at $2.4 million on the line, and they'd have a $900,000 line of credit to supplement their income as they see fit, or to stop making payments on the house, or both. Absolutely, this allows you to control your finances. You become your own bank. Very, very different than the thought process that's been beat into our heads about the 30-year amortizing loan.
Okay, now let's take it the next step, Doug. And I don't want to get too technical, but if you want technical information, you go to, was it GoHomeSelectChallenge.com?
Nope, just GoHomeSelect.com or HomeSelectChallenge.com.
Okay, so go to any of those, or you can go to RSR HomeSelect. That works, RSRHomeSelect.com. All three of those websites work. They're basically going to give you a lot of the same information. But here's the issue: is Doug, if I got income, but there's so many people. I mean, I go out. Most people that follow me on social media know that a lot of weekends I go out and walk Balboa Island, and I don't think you can buy anything on Balboa Island for less than $4 or $5 million. And my guess is that probably 75% of the people that live there could not afford to buy that property today based on their current income. But they've got assets. Can you use some of your assets to help qualify for this loan?
Yep, we can absolutely help income qualify you through depletion, which is a technical term for using your assets to. We use a ratio to turn that into income for qualification purposes. Absolutely. So if you're asset heavy, this loan will still allow you to qualify.
So Doug, I'm gonna throw something at you that I'm sure that you've heard already. This sounds way too good to be true.
It does.
How do I get my arms around the idea that this just sounds like it's too good to be true? And we've been taught since the day that, since we're a little kid, if it sounds too good to be true, it probably is.
Just do your homework. It's been around. This loan's been around for 20 years, like Todd brought up last weekend. It started in Australia. It went to New Zealand. They tried to bring it here. Richard Branson brought it here and didn't do a great job of getting it launched, but it's been in the United States for 20 years. It's been in the UK. It's been in Canada. It's in Japan. We have much data on it. Go to our website at GoHomeSelect.com and you can learn more there. There's a PowerPoint presentation that explains how it works. Once you understand how it works, it starts making sense. It's not nearly as scary. And you'll realize that this is just a different way and a much more efficient way to deal with your mortgage. And it puts you in control instead of the bank. Because right now you're paying on a 30-year amortizing loan where for the first 222 months out of 360, you're paying more interest than principal. For the first 5 or 6 years, you're paying almost all interest. The banks love it when you keep refinancing.
Yeah, because they've got more on this particular product. They don't like you because of the security that you're taking away from them, do they?
Disruptive. I just saved my client $1 million that would have gone to his mortgage lender. Instead, he gets to keep that in his family, build generational wealth for his kids, put his kids through better schools, whatever it is that he wants to do. And I've run scenarios for much larger houses, $2 and $3 million loans, where these guys are going to save $3-4 million bucks. I mean,
Are they going to still be in the same effective interest rate range? Is it going to still be that massively low number?
It really generally it's going to be lower for sure. It depends on how much discretionary income they have left at the end of the month.
So one of the things I'm going to throw out there, because I can, is that generally that which we don't understand, we don't like. That's just common. It's just human nature. If we don't understand it, we don't like it.
Yep.
The question is it worth $1 million? Is it worth $500,000 to go and get educated? Now, if you can go to Columbia, and I think it's about $80,000 a year. Doug, you're not going to charge somebody $80,000 a year to educate them on this, are you?
Absolutely not. It's absolutely gratis. I just want people to understand that there are better options out there than what's been crammed down their throat for the last umpteen years since the Great Depression.
So I want to look at, I think I've got a file in front of me here that is a $360,000 loan.
Mm-hmm.
And I thought that we put in there how much money that person's going to save on a $360,000 loan. I just found the number.
Mm-hmm.
Just throwing some numbers at it. And I'm not going to give all the exact numbers. We've done that before. You can go to the websites and see the exact things. But if you're looking at, again, this is a small number, and I know $360,000 is a lot of money. Don't look at me and say that I'm pretty crass about that. It's a lot of money, and it's somebody's castle. But in Southern California, with Orange County being at $1.1 million, $1.2 million as a median home price, 360 is not a big number. That person can save $426,000.
Yeah, they can hit you all the way to the bank.
Right? Think about that. That's more than their 401k could grow to or potentially be. $426,000
and fast.
And so those are the type of things. Now, is $426,000 for a first-time home buyer worth spending a half an hour or an hour on a consultation and on a few websites? You're spending more than an hour on TikTok, right? So just think about that concept about how you could help your kids, your grandkids, yourself. This is massive stuff, and it's not anything really new. Doug just told us it's been around for decades.
There's never been a default, which is really surprising to me. I'd heard that number, but again, because of some of the features we've already talked about, you can see why. So if somebody knows that they're in a very slippery predicament, this gives them a real safety net as long as they've got that equity there to figure out what they do before it's up around their neck. Whereas a normal mortgage, hey, you missed a couple payments, man. You're going to get a knock on the door, and they're filing paperwork at the court.
Think about this. If you're making, let's just say $5,000 a year, and you've got $200,000 in equity, is my math right that that's about 3 years worth of your household a replacement income?
Yes, sir.
For you to go and get retrained or find a new job?
3 years of just being able to breathe and reassess what you're doing and get a new trajectory for your life. Absolutely.
Great information. Doug, I appreciate you coming on. We're gonna have all of these things in our show notes where you can actually get some data on this. If you want more information, give me a call at 800-306-1990. You can go to HomeSelect, gohomeselect.com, or rsrhomeselect.com. Get the information that you need to make an educated decision. Whether it's right for you or not, I don't know. What I do know is you cannot make an educated decision without being educated. I just throw that out there. Again, Doug, thanks for joining us. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.